if you've been staring at the charts wondering whether it's all over, you're not alone. The timeline has been full of doom posting. There's a growing consensus that crypto is staring down the barrel of a long winter grind. No lows until late 2026, bear market only, pain only in the charts. But I've got a theory for you today that might sound completely out there. So on first listen, just keep your mind open, okay? And it goes like this. What if this isn't the start of the bear market? What if this is actually the end of the bear market? We had a left translated cycle. 2025 has essentially been a bear market for basically everything. And I know it sounds ridiculous. I mean, not for stocks. Stocks have been great. I know it sounds ridiculous, but after all, Bitcoin did hit new all-time highs in 2025. Corporations went crazy for Ethereum. But hear me out, because if you look at the price action for altcoins, you can see the majority have actually been down only, or basically screwed for most of 2025. And even if we study the big rallies we saw in Ethereum, for example, or Solana, when you zoom out, they look a lot less like mania-driven bull runs and a lot more like, kind of weak bear market rallies even. I mean, look, ETH's new all-time high is only $100 above the 2021 all-time high. That's the best you got for a bull market? Screw that noise. This kind of short-lived traps end up sucking in liquidity before the next leg down. These are bear market rallies. Plus, it's plausible that the only reason BTC and ETH could buck the bearish crypto trend was because of the ETF buyers and the digital asset treasury buyers who are less time sensitive. And yes, of course, Solana got these later on too, so their gains weren't due to some kind of organic retail-driven mania like we saw in 2017 and saw in 2021. All those people are off buying AI stocks and data centers. Those previous bull runs were true parabolic moves. But this year was different. And that leads us to a more important question. Was 2025 itself just a giant trap? Mechanically putting in a new Bitcoin all-time high the year after the halving should define the bull market. But this time around, it was 2024, the year of the halving, that actually felt like a bull market, even very briefly. It was up only for BTC, ETFs were vibing, man, the election run-up created euphoric vibes, everything seemed possible. Until January. And then nothing seemed possible anymore. It was a very, very short-lived season. Just a flash in time. A few weeks of bullish price action. Most coins still did fuck all, but some did something. 2025 saw reality crash back in. Chop, grind, catching up to those sky-high expectations. Profits were given back to the market if they weren't locked in quickly. So objectively, which of those sounds like a blow-off top and which sounds more like a bear market hangover? Look at it like that. And maybe we had a shortened and accelerated 2-year bull market that actually ended in late 2024 or early January 2025. And since then, we've actually been suffering through a crypto bear market without even realizing, because the ETFs and digital asset treasury companies bidding up ETH and Bitcoin kind of made this whole fugazi look like something was really happening when it really wasn't. If that framing holds up, and we'll explore more on that in a moment, it means that we're actually now going through, with all the accompanying fear and capitulation, something that's not the opening of the bear market, but perhaps the bottom of 2025's bear market, the finale of the silent bear of 2025, especially as the charts are now showing oversold signals that only rarely appear at the bottom of bear markets. Look at the data and you can see how, according to the weekly RSI, the recent crash brought only the 6th time in the entire history of Bitcoin that it has been that oversold. We're talking about major historic capitulation levels that only appear at the bottoms of bear markets. Plus, major cycle-defining bounces have historically occurred when the RSI hits between 25 and 35. And guess where we've been hitting? Right around that level, man. Hey, by the way, Bitcoiners, if you're in the UAE, you got to come to Abu Dhabi Bitcoin. It's happening in just 2 weeks' time. You can come meet me. I'm going to be there. Michael Saylor is going to be there. A lot of great Bitcoin names are going to be there. Come, join the fun. If you've never been to a conference like this before, they are incredible for networking, for meeting like-minded people, knowing that there is a community of people just like you out there. There are other weirdos, okay? Come along, have some good times, meet some people. You'll get 10% off your ticket when you use the link down below to book it. Thank you very much. And if you want more confirmation, pull up the Bitcoin to gold chart. The monthly RSI in that chart is currently more oversold than it was at the absolute bottoms of the 2014 and 2018 bear markets. Think about that for a moment. Relative to gold, Bitcoin is more beaten down now than it was when everyone literally thought Bitcoin was dead, absolutely deceased forever, would never survive as an experiment. Here we are now in 2025 with BlackRock Bitcoin ETFs. Feels a bit different, but a reason buyers may be reluctant to immediately commit is because in 2025, expectations were shattered after the thrills of 2024. Most of us entered 2025 with high hopes, and for good reason. We had the ETFs, man, crypto treasury companies, a pro-crypto administration, Trump's gonna take Bitcoin to the moon, baby. The 4-year cycle meant this was all happening in the perfect timing. The perfect storm was here, all that cool shit happening in the year that we're supposed to have the 4-year cycle blast higher and take us all to infinity. Perfect timing. But then reality went a bit off script. Bitcoin did tap a new all-time high, sure, but just barely. Then it dipped, ranged, and it's currently down on the year. ETH, same situation, barely broke new highs, and altcoins just kind of largely been fizzling out. In fact, many altcoins are now under the lows of the FTX 2022 crash. Meanwhile, gold, the bulky old boomer rock, is up huge. Stock market with the AI trades in full swing, baby. You should have bought Nvidia, not Bitcoin in November 2022. You would have outperformed by 3x. But what's interesting with Bitcoin here is that for the better part of the year, before the recent sell-off anyway, we kind of ranged around that low six-figure area, just over $100,000 for the better part of a year. Not bad. Frustrating new buyers while their asset classes popped off, making us all think, well, our time must be coming at some point soon. We should remember that Bitcoin is more sensitive to global liquidity than any other asset, which brings us to, of course, recent macro headwinds. The first of these is liquidity tightness. Basically, you cannot pump crypto, the ultimate liquidity sponge, if large amounts of cash are not flowing into the system. Government shutdown was kind of the final nail in the coffin for Bitcoin in the short term because it squeezed up all the liquidity plumbing. Then we have a couple of big catalysts misfiring. ETFs are wildly successful, but this year their impact seems priced in. What about Trump's strategic Bitcoin reserve for America? It's fair to say that in 2025, the narrative has been dropped by the wayside. Unlike in the run-up to the 2024 election, everybody is very bullish on it happening. Surprise, surprise, politicians talk out their butts. Thirdly, the AI trade has been pulling in huge flows of money that would have rotated into crypto normally, meaning that this year, if you wanted risk-on returns, you bought AI and AI-adjacent stocks as capital rushed into a surer bet. A lot of good AI stocks are up 10 or 20x in the last year, while your altcoins are finding new definitions of hell. By the way, make sure to sign up for my free newsletter. Get all latest on stocks and crypto. Links down below. 180,000 people reading it. You can be one of those sexy people. Go check it out. Okay, so look, on top of all these factors, we're seeing OG Bitcoin distribution with long-term holders selling in the Bitcoin IPO moment. Okay, they're selling in size, exerting a lot of pressure. Literally have guys cashing out 10, 20,000 coins. However, this kind of rotation as coins move to new holders at higher price points is part of how new support levels get formed. And it looks like right now a pivot is coming, and this is key. The macro environment is shifting in critical ways. That means quantitative tightening is ending after years of it happening. The Fed's balance sheet is set to grow again. And so we're looking from here at a process of slow and steady expansion. When that happens, then over time, it will be risk on assets that absorb the flows. And as mentioned, Bitcoin has proven to be one of the most sensitive risk absorption assets. So from where I'm standing, recent price action looks less like the first frost of a crypto winter and more like the deck's getting cleared up for further upside after what has been a pretty disappointing 2025, which has in a weird way been the silent bear market. Thanks for watching.